Welcome to the most surprising investment video you'll watch this year. If you're tired of the same old advice and looking for something truly transformative, you're in the right place. Today, I'm going to reveal a secret strategy that can turn every $100 into a staggering 450 to 900% return. Imagine the possibilities: paying off debts, funding your dream vacation, or even securing your financial future. Yes, you heard that right. A strategy so simple, anyone from 8 to 80 years old can use it. Whether you're a seasoned investor or just starting out, this method is accessible to everyone. Now, you might be thinking, what's the catch? It sounds too good to be true, right? But let me assure you, this is no gimmick. Is it day trading? Options? These methods can be risky and require constant monitoring, which isn't ideal for everyone. Some kind of crazy scheme? Absolutely not. We're talking about a legitimate, time-tested strategy that has been quietly generating wealth for those in the know. Nope. In fact, it's an investment strategy that's been hidden in plain sight, overlooked by most financial gurus. It's not about following the crowd, but about understanding a unique approach that can yield extraordinary results. We're going to break down exactly how it works, and more importantly, how you can start using it today to potentially achieve life-changing returns. Stay tuned as we dive deep into the mechanics of this strategy, providing you with all the tools and knowledge you need to get started. By the end of this video, you'll be equipped with a powerful investment technique that could transform your financial landscape. Let's face it, most people are told to throw their money into an S&P 500 index fund. It's the go-to advice from financial advisors, investment blogs, and even your well-meaning friends and family. The idea is simple: invest in a broad market index that tracks the performance of the 500 largest companies in the United States, and you'll be set for life. And call it a day. No need to worry about picking individual stocks or timing the market. Just set it and forget it. Sure, you're essentially investing in the backbone of the American economy. 500 of the largest companies like Apple, Microsoft, Amazon, and Google. These are the giants that drive innovation, create jobs, and generate massive revenues. And historically, you might see returns around 7 to 10% a year. Over the long term, this has been a reliable way to grow your wealth. But let's dig a little deeper. But let me ask you this: is 7 to 10% really going to cut it in today's world? With the cost of living increasing at an unprecedented rate, and inflation eating away at your purchasing power, those returns might not be as impressive as they once seemed. With inflation soaring, your cost of living skyrocketing, and the value of your dollar shrinking, it's becoming harder and harder to maintain your standard of living, let alone improve it. Those returns are barely helping you tread water. You're not just trying to grow your wealth, you're trying to keep up with the rising tide of expenses. You're working hard for your money, but is your money working hard enough for you? It's time to rethink your investment strategy. Are there better opportunities out there that can offer higher returns? Can you diversify your portfolio to include assets that perform well in different economic conditions? The financial landscape is changing, and it's crucial to adapt if you want to stay ahead. Okay, so maybe you're a little more adventurous. You've diversified into international stock funds, hoping to capitalize on emerging markets. Or perhaps you've dabbled in bond funds enticed by their perceived stability. But here's the reality. International stocks come with their own set of risks: currency fluctuations, political instability, you name it. And bonds? Well, with interest rates so low, those safe returns are barely beating inflation. We're talking about a measly 1 to 5% annually. Is that really going to get you where you want to be financially? Now, some of you are probably thinking, Graham, what about real estate? Everyone knows real estate is a solid investment, and you're not wrong. Real estate can be a great investment, but it's not without its challenges. REITs, or real estate investment trusts, offer a hands-off approach to owning income-producing properties. But with average returns of 4 to 8%, they're not exactly setting the world on fire. And then there's the option of buying rental properties yourself. Sure, you could potentially earn 5 to 10% in rental income, but that's before factoring in property taxes, maintenance, and those lovely tenants who decide to stop paying rent. Chapter 4: Gold and Crypto, the high-risk, high-reward roller coaster, 5 to 10% or more. Let's talk about gold for a second. The classic safe haven asset, right? Well, gold can be incredibly volatile, and while it might offer some protection against inflation, its returns have been relatively lackluster in recent years. And then we have cryptocurrency. I know, it's the wild west of the investment world, but here's the thing. Cryptocurrency, with its decentralized nature and potential for disruption, has already created incredible wealth for early adopters. But it's not for the faint of heart. The volatility can be stomach-churning, and the risk is undeniable. Chapter 5. The Safe Bets High-Yield Savings and CDs, 0.5 to 3% returns, seriously? Now for those of you who prioritize safety and security above all else, you might be tempted by high-yield savings accounts or certificates of deposit, also known as CDs. These financial products are often marketed as the ultimate safe haven for your money, promising stability and a modest return. But let's be real, folks. In today's economic climate, the term high yield is almost laughable. With interest rates hovering near historic lows, these safe investments are practically guaranteeing that your money will lose purchasing power over time. Imagine putting your hard-earned cash into an account that promises a return of 0.5 to 3%. We're talking about returns of 0.5 to 3%. That's barely enough to keep up with inflation, let alone grow your wealth significantly. Inflation, the silent thief, erodes the value of your money year after year. That's barely enough to cover the cost of inflation, let alone grow your wealth significantly. When you factor in the rising cost of living, those meager returns start to look even less appealing. So while they might seem like a safe haven, in reality, they're more like a slow and steady leak in your financial ship. Your money might be safe from market volatility, but it's not safe from the eroding effects of inflation. Over time, the purchasing power of your savings diminishes, leaving you with less than you started with in real terms. It's crucial to understand that while these accounts offer security, they come at the cost of growth. If your goal is to preserve your wealth and keep pace with inflation, you might need to look beyond these traditional safe bets. Diversifying your investments and considering other financial instruments could provide better opportunities for growth while still managing risk. In conclusion, high-yield savings accounts and CDs have their place in a well-rounded financial strategy, but relying on them exclusively could mean missing out on potential growth. Balance is key, and understanding the trade-offs will help you make more informed decisions about where to park your money. Chapter 6. Peer-to-peer lending. Your money, their risk, 5 to 10% maybe. Then there's peer-to-peer lending, where you become the bank, lending your hard-earned money to individuals or businesses through online platforms. While it can offer potentially higher returns than traditional savings accounts, it also comes with its own set of risks. You're essentially relying on the creditworthiness of strangers, and if those borrowers default on their loans, you could be left holding the bag. So, while it might sound appealing on the surface, it's crucial to tread carefully and do your due diligence before diving into the world of peer-to-peer lending. Now for the moment you've all been waiting for, the secret to unlocking those incredible 450 to 900% returns. And it all boils down to two words: crypto mining. But not just any kind of crypto mining. We're talking about leveraging the power of smart contracts to maximize your returns. Here's how it works. Instead of simply buying and holding cryptocurrency, which can be a roller coaster ride in itself, we're going to focus on generating passive income by putting our money to work in the crypto mining industry. And we're going to do it in a way that minimizes risk and maximizes potential profits. Chapter 8. Understanding the power of crypto mining. Now, for those of you who aren't familiar with crypto mining, let me break it down for you. Essentially, crypto mining is the process of verifying and adding transactions to the blockchain, the underlying technology behind cryptocurrencies. Think of it like solving complex mathematical equations. Miners compete to solve these equations, and the first one to solve it gets rewarded with cryptocurrency. It's a crucial part of how cryptocurrencies function, and it's also a potentially lucrative way to generate passive income. Chapter 9. Smart Contracts. Your key to passive income. But here's where it gets really interesting. Instead of buying expensive mining equipment and setting up your own mining operation, we're going to leverage the power of smart contracts. Smart contracts are essentially self-executing contracts that automate the entire mining process. You invest in a reputable smart contract platform, and your investment is pooled together with other investors to purchase and operate high-powered mining equipment. Chapter 10. Unlocking your 450% to 900% returns, a step-by-step guide. Now I know this might sound complicated, but it's actually quite simple. I've partnered with a leading smart contract platform that offers everything you need to get started with crypto mining, from choosing the right mining pool to managing your earnings. And the best part? You don't need to be a tech expert or have any prior experience with crypto mining. The platform handles everything for you so you can sit back, relax, and watch your passive income grow. So there you have it, the secret to unlocking those incredible 450% to 900% returns with crypto miner machines and smart contracts. Remember, while all investments carry some level of risk, this strategy offers a unique opportunity to generate significant passive income in the rapidly growing world of cryptocurrency. If you're ready to take control of your financial future and start building wealth like never before, then hit that like button, subscribe to the channel for more game-changing investment strategies, and click the link in the description below to learn more about the smart contract platform that's changing the game for crypto investors.